till the time we have seen or heard what Fed has to say, in the middle of September. So I think till that point of time, we are going to see more volatility. Definitely, quarter two earnings are going to have a severe cut, especially for the banking space because of how the bond yields have behaved. So I think it will be good to have a very defensive kind of a portfolio, till that point of time, and then maybe review the macroeconomics and restructure the portfolio. But I think till that point of time, it is advisable to go with the same defensive sectors like IT and pharma. And I think if these sectors continue to correct in the next 2-3 days, it will open up good buying opportunities.
What is your take? Do you think we are going through a process of derating, and currently a prudent strategy is that one should not buy anything because every market is in a stress, equities, bonds, and currency?
It doesn't really matter, I guess. Yeah, these are the kind of markets when everything else takes a backseat. There is no concern for valuations. There's no concern for whether a stock is looking attractive from a valuation perspective or not, or it's just one-way street. The buyers have disappeared. There's no liquidity in the market. Even if you want to sell, you can't sell. The prices are falling. So clearly a market which is in a bit of a panic mode.
Jim, the big talking point now is that what could Fed do in the month of September? Do you think somewhere the tapering fears are overdone?
Well, of course, they'll be frightened by what they see in markets already, and not just in emerging markets, which, of course, they don't really care about, as you can tell from the fact that they've pushed this quantitative easing for the last 5 years, knowing full well that the people that would hurt most are the monetary authorities in emerging markets. And it's been a real battle, for example, for the Reserve Bank of India to stand out from, or to stand against the tide of money that the Federal Reserve and other major central banks have unleashed in the global economy. They're to blame for the carnage that we're seeing at the moment, the volatility that we're seeing at the moment. So they don't really care about what's happening in India. They do care about what's happening in the 10-year Treasury bond market in the US. And that sell-off there might be enough to make them think twice about making significant announcements on tapering, or actually to introduce tapering in the quantitative easing process. Personally, I think they should, and I think they should get out of that whole process as quickly as possible. But the fact is that where 10-year Treasury yields are at the moment, it's not going to be very much more on the 10-year Treasury before the US economy gets pushed back into recession.
Of course, the big stock trend of the day was really what was happening with the metal stocks. So not just actually today's session, but the last few sessions. So come to you, Ashwini. How is it that you're viewing the rally, and would you play for more?
Other than the news flow effect today on the Anil Agarwal stocks, I think probably the short trade is over on the metals. But you need more evidence to conclude that they are just about entering a new bull market. And, I would be skeptical of any sector that is going against the market trend, because A, that is difficult to do, and B, sometimes those trends are not sustainable. So you need to see in a long period of some sideways move before we can conclude that these stocks are getting into very serious uptrends.
Varun, in an environment like this, when rupee is weak, exporters, they should do rather well. But in last 2 days, pharma stocks are coming under pressure, and today IT stocks also have reversed.
Well, I would definitely still be positive on these stocks. If you look at the earnings of Tier 1 IT stocks, I think if we change our estimates and take the rupee dollar equation from 58 to 60 and probably 61 for a 12-month forward period, I think the valuations are still attractive. I think barring 1 or 2 stocks, most of the IT stocks are trading at less than 20 times FY15 earnings, and that too for a ROE which is in excess of 20%, and that too for earnings growth of 15 to 20%. I would think in this kind of market is quite cheap. I think the same applies to pharma stocks. Most of the stocks, even the large cap ones, are trading at 20 times FY15 earnings, which I believe is looking at the quality of earnings is cheap. So both these sectors, we are incrementally turning buyers, and we believe that if this correction continues for next 2-3 days, there is a very good opportunity for 15 to 20% kind of a return in a year's time.
What is your take on metals, Varun? Do you think metals are simply bouncing back or they have a trading bottom in place?
Well, I don't think we have heard the worst as far as the macroeconomic data from China is concerned. I don't think the stress for the emerging work is really gone. Till the time we have heard from Fed, I would be very, very skeptical about buying into metals because that is essentially a China consumption story. So I would stay away from the space at this point of time.
Right. Ashwini, come to you. How are you looking at trade in the IT pack and even some of the pharmaceutical majors?
See, I would think that the period of outperformance on these stocks, as in outperformance, contrary to the market, which means these stocks go up while the market goes down, is probably over, and chances are that they will fall, but probably not as much as some of the rate sensitives, but they should also get into fairly serious corrections, given the over ownership and given the rallies they've had. So definitely it's no longer the long trade in the market.
Let's just go across to Darshan and get in some stocks to watch out for tomorrow.
Tanveer, the first stock will be IOC and the other oil marketing companies. Now the buzz on the street is that very soon the government could come ahead and announce a price hike in diesels, and probably dealers at this point of time are feeling that the government has actually run out of options in controlling the fiscal deficit as well as the rupee. So probably a fuel price hike, especially on the diesel side, is something that they say, and IOC will be the biggest beneficiary among all the three oil marketing companies. So IOC is something that dealers are indicating to watch out for. And the next one is Indraprastha Gas, which is again back at 260 levels. Dealers are recommending to accumulate this counter at this level. The counter always moves ahead, significantly ahead of the Supreme Court verdict that will come in with the case against PNGRB. So clearly at this point of time, dealers are recommending accumulating this counter.
Darshan, thanks a lot for that. Ashwini, what are your top ideas for tomorrow morning?
Well, Hexaware is a sell. IT stocks have started coming under pressure. So that's a sell with a stop of 118, target of 106. ONGC is a sell with a stop of 257, target of 238. And Hindustan Zinc is a buy with a stop of 109, target of 121.
Varun, what is it that you'd recommend?
Well, we are definitely positive in the telecom space at this point of time. We believe that the pricing power is coming back to the industry, and last quarter's result was probably a beginning of a big 2-3 year kind of a cycle where we see increased pricing power with most of these incumbent players. In addition, we are also positive on pharma and IT space.
You like private banks in the past, Varun. Are you still a buyer there, or now the safe haven status of private banks is under threat?
Well, we have seen significant derating in the private sector banking space. I think in Q2 results, most of these banks, both public sector and private sector, are going to take a very, very big hit as far as the bond portfolios are concerned, looking at how the yield has played out in the last 1 month. Also, I think there is a lot of concern about the asset quality, and I think in a scenario where public sector banks are showing so much NPAs, I think it's almost impossible that private sector's banks will stay immune to this. So I think for the timing, we would avoid the private sector banking space.
Ashwini, what's the view on financial technologies now?
I don't think it's very easy to take that view, and given the news flow, people should try to keep away, because certainly the stock moves very wildly in both directions. So I think you won't be able to make too much money trading this sort of a stock. But overall, given the kind of news flow, chances are eventually it may finally go down, but it's not worthwhile trading.
Ashwini, directionally you've been short on the market. Is it time to cover shorts and then re-enter when market, when Nifty bulks up a bit, or there is no point to cover up any shorts right now?
Well, we try to buy 2-month options, 2-month puts, so small reactions don't bother us. And in doing all this over smartness, sometimes you miss out the move, like we saw when the market rallied to 57.50. When you have such a strong thrust on the downside, there's no point trying to trade those little wriggles. the big money will be with the big trend.
Varun, are you a buyer in PSU banks? Because the price to book for some of these PSU banks are now looking attractive. And if I look at the historical average, every time PSU banks, they've gone to price to book of about 0.5, 0.75. They have always stuffed there.
Well, I don't think there is a lot of downside, in most of these PSU banks. As you said, they have corrected quite a bit, and the valuations, have become, more or less comfortable. But I don't think this is really the time to go out and buy banking stocks. Maybe we'll, wait till September and see how the Fed event plays out, and then incrementally, look at banks.
Ashwini, it's going to be a tricky market for the next couple of days. What would be your position on the Bank Nifty?
I don't think it will be tricky if you are clear on the trend. Sure, you can have a 2-3 day type of pullback, but eventually both these indices, Nifty as well as Bank Nifty, will go down and make fresh lows. The property of the bear market is that it keeps on making new lows, like a bull market keeps on making new highs. So you shouldn't be looking for bottoms very early in the game. I think it's a little early to start hunting for a durable bottom.